The Specialist of China's Sky, a comprehensive guide to Kingsoft Cloud, KC. As of January 17, 2026, the narrative surrounding Kingsoft Cloud, ticker KC, has undergone a dramatic shift. Once viewed as a struggling commodity cloud provider caught in the price wars of Alibaba and Tencent, Kingsoft Cloud has spent the last 2 years successfully reinventing itself as a high-margin, AI-centric specialist. For an investor looking at Kingsoft Cloud today, the company represents a unique ecosystem play. It is deeply tethered to the success of Xiaomi and Kingsoft Corporation, while simultaneously carving out a niche in China's high-growth sectors like smart healthcare, autonomous vehicle cloud, and large-scale AI training. This guide provides a balanced deep dive into the 2026 reality of KC before you decide to invest. 1. The business model, the independent alternative. Kingsoft Cloud is often called the third-party cloud of choice in China. Unlike Alibaba or Tencent, which compete with their customers in e-commerce or gaming, Kingsoft Cloud remains a pure-play infrastructure provider. The 3 pillars of revenue in 2026. Public cloud services. This is the core IaaS, infrastructure as a service business. In 2026, this segment has been AI boosted. Instead of just selling basic storage, KC is selling intelligent computing clusters designed for heavy AI workloads. Enterprise cloud services. This involves building private or hybrid clouds for big clients in government, finance, and healthcare. These are typically multi-year contracts with higher margins than public cloud services. AI and intelligent computing. As of early 2026, AI-related gross billings have become the primary growth engine, representing nearly 45% of public cloud revenue. 2. The ecosystem moat, the Xiaomi and Kingsoft connection. You cannot evaluate Kingsoft Cloud without understanding its parentage. The company was spun off from Kingsoft Corporation, the Microsoft Office of China, and counts Xiaomi as its largest customer and a major shareholder. The built-in demand. In 2025 and 2026, the strategic synergy within this ecosystem has reached an all-time high. The Xiaomi Smart Car. As Xiaomi's electric vehicle EV division has scaled, Kingsoft Cloud has become the primary provider of the automotive cloud required for autonomous driving data processing. WPS Office AI. As Kingsoft Corporation integrates AI into its office software, those millions of users rely on Kingsoft Cloud's backend infrastructure. Guaranteed revenue. In 2026, the ecosystem contributes roughly 28 to 30% of total revenue, providing a floor that many other independent cloud providers don't have. 3. The 2026 pivot, from volume to value. Between 2022 and 2024, Kingsoft Cloud made a painful but necessary choice. It deliberately shrunk its business. It exited low-margin contracts like CDN, content delivery networks used for simple video streaming, to focus on profitability. The result in 2026. The new Kingsoft Cloud is smaller but significantly healthier. Gross margins have expanded from mid-single digits to over 18% in early 2026. Operating turnaround. In late 2025, the company achieved its first-ever quarterly non-GAAP operating profit, a historic milestone that proved the value over volume strategy was working. 4. Financial performance as of January 2026. KC stock has historically been a volatile ride, but 2026 has seen a stabilization in its valuation as the company moves toward full GAAP profitability. Key metrics, estimated January 17, 2026. Stock price, around $10.34 on NASDAQ, or around $4.50 in Hong Kong. Market capitalization, around $3.89 billion. Revenue growth, forecasted at 14% to 16% per annum through 2027. Cash position. The company maintained a healthy cash balance of over $600 million entering 2026, enough to fund its AI infrastructure build-out without immediate dilution. 5. Vertical specialization, where KC wins. Because it cannot outspend the hyperscalers like Alibaba, Kingsoft Cloud wins by being a vertical specialist. 1. Healthcare cloud. KC has become the dominant cloud provider for China's smart hospitals. They provide the backbone for medical imaging archives and hospital information systems that allow doctors across provinces to share data instantly. 2. Public service and government. With the Chinese government's push for data sovereignty, KC is seen as a safe domestic choice for municipal clouds and smart city projects. 3. Gaming and media. Leveraging its history with Kingsoft's gaming arm, JX Online, the company provides specialized low-latency clouds for the booming esports and live streaming industries in Southeast Asia. 6. Critical risks. The anti-KC case. Investing in a mid-sized Chinese cloud company in 2026 is not for the faint of heart. 1. Intense competition. Alibaba Cloud and Tencent Cloud have massive war chests. If they decide to start another price war to recapture AI market share, Kingsoft Cloud's margins could be squeezed back to zero. 2. Geopolitical and chip risks. NVIDIA chip restrictions affect all Chinese cloud companies. While KC is diversifying into domestic AI accelerators, NPU/GPU, any further restriction on high-end silicon could slow down their intelligent computing growth. 3. Profitability timeline. While the company has turned non-GAAP profitable, it is still losing money on a GAAP official accounting basis due to high depreciation costs of its expensive AI servers. Investors must have the patience to wait until 2027 for true net profit. 7. Investment strategy. How to approach KC. If you are considering adding Kingsoft Cloud to your portfolio in early 2026, consider these 3 perspectives. The speculative growth play. KC is a high beta stock. When Chinese tech rallies, KC often rallies harder. It is a bet on the re-rating of Chinese AI infrastructure. The consolidation play. There is constant talk in 2026 of consolidation in the China cloud market. Because of its high-quality assets and deep ties to Xiaomi, KC is often viewed as a prime acquisition target for a larger player or a state-backed entity. The hedge strategy. Many investors own Xiaomi, HK1810, and Kingsoft Cloud, KC, together as the two companies' fortunes are increasingly intertwined through the smart EV and AI office narratives. Conclusion. The specialist's resilience. Kingsoft Cloud in 2026 is a survivor. It has successfully navigated the death valley of the 2022-2023 tech crackdown and emerged as a leaner, smarter, and more focused organization. It is no longer trying to be the everything cloud for everyone. Instead, it is becoming the essential cloud for the Xiaomi ecosystem and a handful of high-value industries. The verdict. If you are comfortable with the unique risks of Chinese equities and are looking for an AI infrastructure play that is trading at a significantly lower valuation than its US peers, Kingsoft Cloud is a compelling, albeit speculative choice.